Hello and welcome to the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Steve Freed, our Vice President of Grain Research, and Alan Bush, our Senior Financial Economist. Let's start with Steve. Steve, grain futures dropped last week and are rallying today. Why? And will these wild swings continue?
Yeah, I think so. I think last week the market was concerned about demand and just the various things that could happen if interest rates go up and we go into a recession. Also, crude oil was down because of OPEC, making a lot of different decisions as far as how much production, but mostly because of concern about demand. Today, wheat's up because of the bombing of the Crimea bridge and what that might mean as far as Russian response. Overnight, Russia bombed many Ukraine cities, including Kiev, and he said one option is using a small nuclear bomb. So the market's concerned that now the Russians will not extend the Ukraine export corridor deal, and it takes quite a bit, especially corn, but also wheat, off the world markets. We also, in the beans, maybe seeing better river logistics, which is allowing beans to finally move. China is back from holiday with record crush margins, and so we'll just kind of see how much order flow will continue to come into the grains.
The next USDA report is this week. How will the market trade the numbers?
Well, they're going to give us a lot of different numbers. Certainly the bean carry-in is up. The crop may or may not be bigger, but certainly people are dropping the export numbers, which would increase the carry-out. Over in the wheat, looking for a lower U.S. wheat crop and lower carry-in. And in the corn, they have to move a lot of numbers. There's a lower carry-in, potentially lower crop. They have to increase feed and residual. They could drop ethanol a little bit, but the number one thing is they have to drop our export numbers just to get to 1 billion carry-out. So like recently, it should be a friendly corn and wheat report, and maybe a little negative in the beans.
All right, and finally, Steve, what is the Q4 and 2023 global weather outlook?
Well, we're still seeing dryness in Argentina. For the most part, Brazil is off to a good start. We also note that it's normal weather in Europe, and probably a little colder and drier than normal across the Balkans and parts of Russia and Ukraine. Central China continues to be drier than normal. U.S. Midwest will be dry, and we're looking at a pretty speedy harvest. Maybe beans 50%, corn 35%. Southern Plains also remains dry, which is also probably helping wheat rally today. If you look at the 8 to 14-day maps, it's got the U.S. split right in half down the Mississippi River. To the left is warm and dry conditions this fall and probably this winter, but to the right is much colder and wet conditions for the east and northeast, which could be a problem as far as energy is concerned. And you can almost say the same thing about Europe. Western Europe, normal, while Eastern Europe is going to be colder and wetter than normal.
Thanks, Steve. Moving over to Alan. Alan, what economic reports and events will have the most market impact this week?
Well, first of all, on Wednesday, we'll get the minutes from the September 21st FOMC meeting. Most likely, those minutes will be very hawkish, as they have been for the last several meetings, and in keeping with commentary from Fed officials, also very hawkish in recent weeks and recent months. So I would expect more of the same, that the minutes will continue to point toward further interest rate increases. Also, we'll have the producer price index on Wednesday for September. That's guessed at up 0.2%. That would be on an annualized basis of up 8.4%. But That would be a bit less than what we had in August. Also, then on Thursday, we'll have the consumer price index, also guessed at up 0.2%. And that is anticipated to be an annualized increase of 8.1%, but also a little less than what we saw in August. And then, of course, we have corporate earnings from major banks later this week.
All right. What is the next major support for S&P 500 futures?
Well, right now on the monthly charts, that would come in at 35.40. That is a breakout point to the upside in October of 2020. So that would be the next support, 35.40 in the S&P futures.
And one last question, Alan. How high will the Fed funds get in this rate hiking cycle?
Well, first of all, it appears very likely that the Fed will hike by 75 basis points at the November 2nd meeting. In fact, there's an 82% probability of just that. And the remainder at a 50 basis point hike, probably another 50 basis points in December and more in the first part of next year, probably topping out around the 4.5 to 4 3/4 level. That would be potentially at the May 23 meeting.
All right, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.